Hi everyone, and welcome to the Buffett and Beyond Stock Analysis video podcast with your host, Dr. Joseph Belmonte, and Debbie, and that is Debbie with the Y. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week we're going over a heavy truck and equipment operator and builder, and that's Paccar, and they're out of Washington State, and it is our stock of the week. And yes, folks, they build these kind of trucks here along with the parts. And no, she doesn't come along with the truck, but she knows how to drive this one. That's what I was told. And the stock analysis, well, Paccar is a leading manufacturer of light, medium, and heavy-duty class trucks marketed under Kenworth, and we've all heard about Kenworth, Peterbilt, and DAF nameplates. The company produces the engines primarily for use in its own trucks and distributes parts for the aftermarket. Truck sales accounted for 75% of revenues last year, and parts accounted for 25%. It operates manufacturing plants in the U.S., Europe, Australia, Canada, Central South America, and 22 truck revenue by geography, U.S. 58%, Europe 27%, rest of the world 15%. Has 31,100 employees, so it's a big company, folks, and boy, oh boy, it's hard to take market share away from a company that has been around for such a long time and is doing very, very well, as we're going to see in the numbers. And let us look at the 5-year averages. Now, the blue lines represent the average stock in our database, which includes the S&P 500, and the green line represents Paccar. So we want to look at the 5-year averages overall and see how the company is doing. And we can see the clean surplus return on equity. And think of your bank when we talk about the return on equity. How much money do you have in that bank, and how much money do they retain so that you can make more money on your money year after year? So Paccar's up 20%, and folks, that's enough to get us or think about putting this company into our growth portfolio. And guess what? We've had it in our portfolio before, and now all of a sudden this company is looking very, very good once again. Average stock about 13.5%, and as I mentioned, Paccar 20%. Now net income, average growth rate for the companies are about 13%, the average company, and Paccar's up at 22.7%. Revenue, average company 7.1%, and Paccar up at 8%. So the revenue is just a little bit better than average, but everything else is really, really, I don't want to say it, but it's operating on all 8 cylinders, folks. Now, let us look at the individual numbers, and the only thing that bothers us is that this net income for 2023 is expected to be $9.10, but next year it's going to fall off to $8.75. Now, when you look at all the other numbers all the way down here, you can see that this year, 2023 and 2024 are phenomenal relative to the other numbers before in this company. So this gives us a clean surplus return on equity that is rising, and boy, oh boy, the market loves that. Retention rate about, on the average, 61.4%. We'd like to see 100%. We want to see companies that are putting money back into itself in order to grow. So this company is past its fast growth stage, but so many companies are, and they're starting to give it out in the form of, look at this, 3.5% dividend. Very, very nice. Now, the only thing that bothers us is that we've had the net income growth at 22.7% 5-year average, and revenue growth at 8%, and we are looking at a fall back from these higher levels. But look at the high levels that we had in 2023 and also 2022 and 2021. So a little coming off of those high levels is maybe to be expected, but on the 5-year growth, very, very good. And one thing we're looking at is the dividend growth rate. Now, to get into our dividend growth and income portfolio, we want to see dividend growth of about 7 to 8%. And we can see this company is averaging 12.2% with the high dividend of 3.5%. We might look at this for our dividend growth and income portfolio or our growth portfolio. So we're looking at this stock very, very closely because, as I mentioned, we've had it before in our growth portfolio. Look down here, above 20%. The only thing we don't like is that this company shoots ahead with 20% ROE or better, and then it falls back, and then it shoots ahead again, and then maybe we don't know if it's going to fall back or not. But you can see that we don't see a good, steady, clean surplus return on equity. So it has its good years, and it's still above average. The average stock has a clean surplus return on equity of 13.5%. So even when this company falls back, with the exception of COVID in 2020, with the exception of that year, it has always performed better than the average stock. So this is something to look at, folks. And when we look at how it's done in the past 1 year, black line is the S&P 500. Now, this is the past 12 months, so it's the full year. S&P 500 up about 13, almost 14%, and Paccar is up 33% or so. So you can see that over the past half of the year, it has really come alive as it builds more and more trucks, and the parts division is really coming alive with this company also. And that's another report that we finished that we're not putting here, but you can see the result on that stock. They like it. And over the past 5 years, once again, it's been a little bit better than average stock, fell below it just a couple of years ago, and now is advancing nicely. So this is a pretty nice stock, folks. We like it. As I mentioned, we've had it before in our growth portfolio, and now we're looking at it for our growth dividend, growth and income portfolio also. So we'll hear more about this over the next month and a half, because over the next month or so, we have to come out with our 30 stocks for our growth portfolio, and also the 17 or 18 stocks for our dividend, growth and income portfolio. So, folks, remember, just look at this sunrise, and you can see in the background there's a ship right in there under the sun with the day beginning. And if you want to live on this beach like Jimmy Buffett once did, yeah, he lived right up the road a couple of miles, then you want to learn how to invest even better than Warren Buffett does now. So, folks, we've had a good run in the market. Everything is looking nice. You go out, you have a good weekend, enjoy it, take your mind off the market, because guess what? It'll be back open again on Monday. All right, folks, you stay safe, enjoy the weekend. We'll see you back here next time.